equities makes tremendous sense because the investment thesis says that you are investing in somebody else's business, right?
Right.
Today, people invest through tokens, but equity will always be there. Can we bring that equity on chain? Can we can we bring the same narrative? Can we bring the same distribution of wealth, distribution of earnings of a company through dividend rule, but on chain?
My kind of prediction here is that as time passes, the equity markets will become more and more and more accelerated, more and more and more speculative, and the bond markets will be more and more and more the core physical infrastructure that takes decades to build. And the in-between layers, I think, are going to thin out and thin out and thin out and thin out. It's going to be very, very crazy. Hello and welcome to the Future of Stuff 2.0 podcast. I'm your host Praveen, and today I'm joined by leaders in the RWA space, Vinay Gupta and Piyush Gupta. They share a last name but couldn't be more different, but are united in the mission to bring RWA to the world. With RWA projects on crypto, you'll see incredible opportunities being unlocked by not just bringing assets to chain and creating tremendous value for the overall blockchain space, but also democratizing access to folks who otherwise wouldn't have a chance at getting at any of these assets. So what we are going to be doing today is speak to these leaders, understand their vision for their projects, and what they're going to be bringing to the table. Okay, with that, I would like to hand the mic over to Piyush Gupta, the founder and CEO of Polytrade. Piyush, over to you for a quick introduction about yourself and the Polytrade project.
Thank you, Praveen. It's a pleasure to be here. Hi, Vinay. Nice to meet you. Very quickly about me, myself, and Polytrade, of course. I'm founder and CEO of Polytrade, as you already mentioned. I've been into blockchain space for 3 years now. Before that, I was running a Web2 business in trade finance for almost 7 years. Managed a book size of $500 million, funding largely exporters from Asia. Got a deep insight into how trade finance worked and knew the inefficiencies around it. And that was the driving force of moving into Web3, that can blockchain solve the basic issues which exist in Web2 world, in the financial world, right? The scams, the frauds, the duplicacy of invoices, the funding issues and all that. Started successfully in 2021, launched Polytrade, started tokenizing these trade assets, invoices, and we funded around $9 to $10 million of invoices using DeFi liquidity. Soon realized that problem is not just one asset class or one segment of the whole financial world. There are such beautiful projects out there which are available for people, tokenized state. How do we bring them to people, right? So for, again, taking a very basic example, for me to amplify Polytrade's, availability to the market, there are certain channels where I can go market. How would a common man search for Polytrade unless he knows that Polytrade does this thing, right? There are 10 other players in the market who are also doing trade finance. How would somebody know about it? There was a large gap we identified in the system where the whole discovery mechanism was missing. That how would somebody know about trade finance tokenized assets? Simple example. How would somebody know about real estate tokenized assets? There are tons of protocols in different geographies doing it. So we decided to move on to a much larger play where we said that let's go into a collaborative mode, build a marketplace where we become an aggregator of globally tokenized assets by others. We will not touch any native asset of our own, right? We'll do our due diligence on protocols. We will check whether they have proper audits, they have proper custodians in place, how are they doing tokenization and all that. Once we are satisfied, we will allow them to list their assets on the marketplace. That solves three purposes: bring users kind of discovery to these assets. I want to go real estate on Arbitrum. Simple. Go to our marketplace, do the filter, and you will get all the Arbitrum projects which are doing real estate, right? I want to do Polygon, just switch. Simple, right? So first the discovery aspect is sorted. Then comes the trading part. Can I bring secondary trading aspect to these assets? So Praveen, today RWS, everybody knows that money goes in, will be stuck because it has gone into the real world. It is not a
Correct.
DeFi where you just say that I want my money out and you click a button and you get it out, right? If you have funded a Walmart invoice, that funding will come back, that money will come back in 90 days. You have to wait for 90 days. There is no way you can get your money back. But we don't live in that world. People want their money back right now, right? So can they sell their RWAs in secondary market at a discount maybe because I need liquidity right now. I'm happy to give 3% discount to my invoice and get my money back.
Yeah.
So there was a gap, there was a need of secondary trading aspect available to it. And then again, because we all come from Web2, we realize that embedded finance has been a very instrumental play for retail users, right? So can people borrow money against these RWAs? If I'm buying gold, if I'm buying real estate, if I'm buying treasury bills, these are assets which are in Web2 are beautiful assets. Banks and lenders are ready to lend against it. Can I build on top embedded finance products on these tokenized assets?
Yeah.
So with these initial thoughts, we moved ahead with launching creating Polytrade marketplace. With last 7-8 months of hard exercise, we are now at phase 2. The marketplace is launched for whitelisted users. Around 20,000 users are constantly using it, and we are moving towards our final public launch very soon. I'm sorry for
Fantastic.
taking a bit long, but I have covered
this
a
is
lot of.
fun. It's fantastic stuff. I mean, this is the real kind of maturation of the blockchain space. That's kind of sort of making the blockchain do all the stuff that everybody always thought the blockchain was going to do. And this is the point of the entire exercise.
And I have seen the team at Polytrade describe the platform as an Amazon, but I think that's underselling it in so many ways because of the sheer capabilities and liquidity access and so many other ways in which the platform actually enables access in a way that the Web2 audience is yet to even comprehend because it is so tremendously different from what they have experienced, what they've come to expect when it comes to
And not
marketplaces.
just the Web2 audience, the TradFi audience.
Yeah.
If you're used to sitting down there with the Bloomberg terminal, you might be able to get prices for stuff all over the world, but it's not like you can just sit there and buy stuff. It's very, if you want to buy something in Thailand, or you're in Thailand and you want to buy something in, Lithuania, right? Like the international aspects of this stuff are very, very difficult for existing trading technology. So you start thinking of the global scope of, the blockchain, and if you could figure out how to get the assets on chain, a very much better thing opens up.
For sure.
And I think this is a perfect time for you to share a quick introduction about yourself, Vinay. I'm sure folks on the podcast already know you quite well, but for the benefit of our new listeners.
So, very, very briefly, I have a long background in crypto, going back into the 1990s. I've done a bunch of work for various governments as a cryptographic applications researcher, and I left that world and joined the Ethereum team in 2014, where I project managed the launch and did a lot of the early comms and marketing stuff. 2017, I left to go and solve the legal problem. The mission was to try and make smart contracts into legal contracts. We had some taillights to follow from a guy called Ian Grigg, who's still active in the space. And we put together a system over the next several years that worked for any legally recognized asset class in 170 countries. So it's possible to tokenize anything. And the way that works is as much about making sure that the asset is what people say it is, as about binding the asset to the token. So if you were to, for example, buy a house and the house turned out to have a structural problem, you as a token buyer, like if I'm buying a house in, if I'm in Thailand and I want to buy a house in Lithuania, I'm not going to fly to Lithuania to inspect the house. I have to trust some third party to get me the data. And I can't just say, okay, I trust this person. What I need is a legal warranty so that if there is a problem, there is money to cover. And so what we did was we basically wove together legal, technological, and risk management concepts to get something that provides a kind of universal wrapper for assets that allows you to then make them tradable on chain.
And I think a really strong wrapper for making assets tradable on chain is also the dollarization of various assets on crypto. And that's a good segue to go into the RWA trends that exist today. Until this point in the crypto journey, stable coins like USDC, USDT, and even some infamous ones have attempted to demonstrate capability and access to RWA assets. Vinay, could you give us a brief outline and journey into the space of, and what do you expect the stablecoin journey to look like over the next years?
So I think the stablecoins are an interim phase, right? So somebody at some point comes along and says, "Well, if I just had a bank account with a bunch of dollars in it, I could issue some coins off that, one coin per $1, right? That'd be great." And that idea is surprisingly old. If you look at how old USDC and USDT are, these things are old, and they did basically no volume until, was it 21 or 22, when they put on $90 billion of assets in 12 months. There was just a sudden whoosh, and everybody wanted dollar coins. And now there are just about enough dollar coins to go around, so the dollar coin supply is relatively stable at this point, and I think it's going to remain there until you see central bank digital currency projects. And when the central bank digital currency projects come online, it's either going to 10x or chop the total size of the dollar coin market. Too early to say which way that's going to go. We also know euro coins are becoming more popular, and I think other currencies are going to follow. And it just kind of makes sense, right? Like if an object is priced in dollars, you would like to be able to get dollars for it, please, and that just kind of takes you down that track.
And being based in India, I couldn't say that I'm more excited about a potential of INR denominated coin on chain with the strong fundamentals, audits, and other aspects baked into it. One of the opportunities that stablecoins also bring to the table is in volatile countries where not just banking infrastructure is not up to snuff, or where war-torn nations where access to funds might be highly risky or even impossible. You can imagine a potential where self-custody and even a basic, maybe now with Starlink becoming the growing narrative over the next coming years, you might say that all you need is an internet connection and you will always have access to self-custody of your assets, your funds, which is a tremendous, tremendous empowerment of the human race. What that asset might look like, it could be a stablecoin, it could be real world assets, nobody cares. It's about security, it's about confidence, it's about freedom. So again, I'm super excited about the opportunities for RWA, not just for the nations like the United Kingdom, European Union, or the United States. I'm also very excited about what it offers to emerging economies around the world and what the citizens of these nations get to benefit from. There's been some tremendous uptake in the kind of listings and partnerships that Polytrade has been announcing. You also list various equities and bonds on the Polytrade marketplace. Would you give us a quick background on what these look like, how they operate, and what kind of benefits they offer?
Sure. So Praveen, I always love how my team feels for the project, right? And probably it's the culture in the team and however you want to put it. Yesterday I was chatting, I keep reading community chats, and somebody asked that, what are the plans for Polytrade to list in future? And Shreya, out of blue, came out and said that Polytrade will list every RWA on the planet, right? And I just one line statement, and I was so happy and so proud of my girl. This is my team. So coming to your answer, and there's a reason I quoted that, because the way distribution of products used to happen in our TradeFi world, Web2 world, is there's an institutional adoption, then it goes down to distributors who finally penetrate the retail, right?
Yeah.
And then financial products comes very easy to our mind because that's where everybody is involved, whether it's through fixed income, whether it's through savings in the bank, whether it's through equities, whether it's through currencies, blah blah blah, right? I mean, all sort of, and that's easy to replicate on blockchain as well, in Web3 as well, right? Everything else would fall into place, but financial products are the easiest, and we have seen that by treasury bills and dollar denominated stable coins. I mean, that's the oldest RWA, right?
Right.
If you think of it, equities makes tremendous sense because again, by nature, by our history, learnings from father parents, grandparents, we've always seen that put money into stocks. The investment thesis says that you are investing in somebody else's business, right?
Right.
Today, people invest through tokens, but equity will always be there. Can we bring that equity on chain? Can we bring the same narrative? Can we bring the same distribution of wealth, distribution of earnings of a company through dividend rule, but on chain?
Mm.
That's one way of putting it. Second way, countries where US stocks primarily, US, we all believe that US is a very deep stock market.
Correct.
Unlike India, unlike any other developing country where markets are not so deep yet, US is very, very mature market, right? Can I bring those beautiful stocks, beautiful company stocks to people sitting in parts of the world where they were never able to reach? For example, Africa, for example, LATAM, for example, India. Today, I'm sitting in Dubai. Everything's easy for me. I can go out and open 10 brokerage accounts, interactive brokers and whatnot, and trade any US stock I want, right? But that privilege is not available to everybody on the planet, right? But if I am able to bring those tokenized equity stocks on chain, I will give these privileges to people across the planet, right?
Wonderful.
So that was the thought process that, and again, I understand that all these assets will bring their own complexities of regulatory aspects attached to them. As a marketplace, I'll be very honest with you. We want to stay away from regulations for now because we are all testing the waters. We are all trying to figure out where the demand is. If a protocol is able to take care of his regulations and does tokenize something, I'm happy to list it,
Wonderful.
right? But if and most of the times, you will eventually realize that products are available on Uniswap because they are tokenized through ERC20s. But then there are assets which are ARC 721, ERC 1155, and tons of other ERCs are being innovated now, right? They all bring their own qualities and challenges. So um, because they are KYC gated, because they are having certain other nuances attached to them. So as a marketplace, we wanted to bring homogeneity to these asset trading. So we authored ERC 6960, which was a dual layer token, and our idea was that at the primary layer, let the original NFT or the original ERC be stored, and then there is a secondary or a child NFT being generated, which will be able to kind of work around the properties of the primary asset. And the history is much longer. We did that because we realized that RWAs are constantly changing their state. Uh, if it's an interest bearing invoice, tomorrow there might be delays in payment, which we cannot record on day one. There might be change in interest rate scenario. There might be delays in shipment. We can't record these on day one, but these are ongoing developments on the state change of the asset. So 6960 was purely developed based for taking care of these things. But then we realized that 6960 was a beautiful discovery. Now we can homogenize various tokenization standards, tap them into 6960, and make trading aspect on our marketplace homogeneous, right? Now, if I go to a lender and I tell him that, hey, can you lend against gold? He will say, yeah, I can lend against gold. Sorry, there is one protocol which is doing 721. There is another protocol doing 1155. There is another protocol doing ERC20. How the hell do I create my tech stack to take care of all the ERCs? So don't worry, I'll wrap them all in 6960. You lend against 6960.
Yeah.
Right?
Yeah.
So
And this
that
is
was
exactly the same chain of thought that we do on the legals. So the Mattereum Asset Passport, right, works in 170 countries and works for all asset classes off a single contract. So there's a single paper contract, which is the warranty contract, and then what facts are being warranted, how much the warranty costs, and how much money is going to be paid out when the warranty is claimed. All of that stuff is represented in XML files. And what that gives you is a single universal legal abstraction for the risk management framework around the physical defect, right? So I buy an RWA, the RWA is, let's say, mortgage-backed securities. Well, if the underlying physical real estate begins to develop problems, the mortgage-backed security begins to develop problems. And so by providing a mechanism for having an integrated risk management framework that works across all asset classes in 170 countries, it means that when the lawyers come to look at the assets, they go, oh, it's a Mattereum asset passport. Then they can just check the facts because they don't have to worry about the legal framework. And because you could have a simple asset with 5 or 6 claims and a complex asset might have, I don't know, maybe even a couple of hundred claims. Think if I'm doing something like securitizing an industrial complex, 14 buildings and $25 million worth of equipment, by the time you've gotten all of that documentation organized and there are underwriters for every single legal claim, you wind up with a very large complex documentation stack, and that's necessary for the backing of the security. Well, you bundle all that stuff up into the asset passport, so it's a single abstraction that scales up and scales down. And you can imagine the situation where we take the asset passport technology and integrate it with your ERC. And at that point, you wind up with a fully integrated legal digital solution for describing and then trading any asset on Earth. Wow, it's almost like we know what we're doing.
So Vinay, you would be surprised when I first heard about the asset passport. There was a similar thought going on in our team that at some level this needs to be done by somebody, right? The moment I got to know about Mattereum, I was like, "Oh, so good, this is brilliant," right? Because this develops, and you just actually said the thing. You move into a completely new vertical. You need to record that data. Whether that data is across chains, whether the data is, the state change. The basic change about RWA is the state change. And if somebody is able to record that state change into a passport, 99% of the problems are solved. And when we talk about mass adoption, I really don't care about the retail adoption because that will eventually follow. I always believe that it's a B2C, which we all are building our businesses for, right? We need to make sure that there is some Nestle, there is some big brand tomorrow who wants to come on chain, tokenize all their catalog using the tools available. They don't have to worry about nuances of chains, nuances of tokenization standards,
Absolutely.
nuances of liquidity.
You're talking my language here. So, people say to me, Vinny, which blockchain is going to win? And I'm like, look, in the late 1990s, database loyalty and web server loyalty was a big deal. We are an Apache shop and we use Sybase, right? And because these things were really hard to use and they were very messy, you would have shops that were, Apache, Sybase. You'd have another shop that was, I don't know, whatever it was, Postgres, and, pick your web server of choice. And there was real kind of clannishness and loyalty and kind of but as these things all improved and they all got more functional and they all started to work properly, they all became basically the same.
Yeah.
And, so the real strong brand loyalty to technology, to a technology means that class of technology doesn't work very well. So it super matters which version of it you're using, right? When the technology actually starts to behave properly, all the brand loyalty goes out the window because you just use whatever works and you don't care because it's all basically the same. And that's very rapidly where blockchains are heading. The fact that you can take basically a pretty standard team of programmers and create an L2, that was not true 5 years ago. 5 years ago, you needed like serious wizards to make an L2.
Launching
Right.
a chain is here today. I mean,
It's become easier and easier and easier, right? So at that point, we're very close to the point where you just have a bunch of adapters that sit on top of the chains, and then you use the adapter and how it does it in the back end. It's like, are we storing these blocks in Amazon S3, or are they on Google Compute Cloud? To be honest, where did our transaction happen? We had USDT on 4 or 5 different chains, and he had 3 or 4 wallet accounts, and we just send it on the one that was cheapest that day. The software figures it out.
Totally.
I think that's the power of the blockchain and what it brings to the audience. Essentially, if it works, I really don't care. Many teams today are also operating on the mission to simplify onboarding, access, and Piyush, what you mentioned about the homogeneity with what 6960 brings to the table and what it provides, and Vinay with the legal standardization with Mattereum asset passports. I hope the founders who are listening to this podcast are taking notes because you have some proven, credible, powerful founders who are giving you key insights into their playbook of why their projects are successful. The another factor, Vinay, I wanted your insight on was bonds. Like Piyush covered, equities are a way for everyone to get access to those beautiful US stocks, and there are so many emerging opportunities in different parts of the world. This access to these equities create tremendous value. Bonds, however, are also have been the fair weather, financial instrument that no matter what happens, you park your funds in bonds, and also you are seeing rumblings from operators like BlackRock coming into the crypto space with RWA tokenization. Any thoughts on the bonds and BlackRock space? I mean, I know you have plenty.
So, a bond is a promise about the future, straight up. And some of these bonds, think of like a 20-year bond, right? 20 years from now, artificially intelligent, autonomous robots will be mining asteroids and sending the material back to Earth in most scenarios. That's probably 70-80% likely. If we don't have some kind of really seriously weird thing happen, if everything just kind of rolls on the way that it's rolling on, that's kind of the world that we're heading into in 20 years. So the world in which a 20-year bond and a 30-year mortgage were pretty easy to deal with, I think that world is gone. But if you're taking a bet that real estate in New York is going to be valuable in 20 years, there's a really good reason for believing that to be true. So I think that the pressure between bonds and equities is that the equities are just a heck of a lot more flexible and adaptable for a rapidly changing world. And the world has never changed as rapidly as it is changing now. Stuff is crazy, right? I used to tell people, don't worry about AI. There isn't a computer in the world that can tell the difference between a cat and a dog, right? And that was true until 5 years ago. And it went from being able to recognize cats and dogs to be able to recognize hundreds of thousands of different objects in about 18 months. And then it went from there to being able to convince even relatively smart people that they're talking to a human almost immediately, another 2-3 years. So what I basically want to say is that the need for finance to keep track and to keep pace with reality is really, really acute. Right. And the bringing of all the data on chain about what things are, the ability to very rapidly change strategies, the ability to deploy capital globally with a single interface, like the Japanese, they've done something amazing. My God, they've got a whole new industrial robot ecology that they set up. It's like Shenzhen, but it's all automated. Wow. And you need to flood resources into that. So think of on one hand, this ultra dynamic routing at this cutting edge. And then at the other side of it, it's like, well, the New York subway system isn't going anywhere, is it? They need to raise some more money because they need to dig some more tunnels. Well, okay. So that notion that you are basically having, the bonds of the world constitute the unchanging part of reality, and the equities, particularly startup equity, represent the accelerating frontier. You need both because you don't know which parts of the frontier are going to flake out. Like, if you bet the farm on VR, boy howdy, that looks like it's another failed revolution. Come back in 10 years. Now, we could be wrong, it could explode in 2 years, but that's an example of something where big companies threw trillions of dollars at it and they just couldn't get it to move. So, my kind of prediction here is that as time passes, the equity markets will become more and more and more accelerated, more and more and more speculative, and the bond markets will be more and more the core physical infrastructure that takes decades to build. And the in-between layers, I think, are going to thin out and thin out and thin out and thin out. It's going to be very, very crazy.
And Polytrade is also, as the bond market continues to evolve, I also see that there is some very innovative explorations happening on Polytrade marketplace with very unique commodities. Again, in sync with your mission to bring everything to be a marketplace where folks can discover, have secondary trading. Keeping in sync with that mission, you also have commodities like diamonds, precious metals. I would love to pick your brain on your vision and anticipation of what you expect these commodities would offer, especially emerging nations, folks like that. Why do they make such a powerful investment?
So we go back to the history of people investing in gold, countries investing in gold, right? I mean, even till date, countries have their national treasuries have a significant portion kept in gold, right? There's a reason for that. It's a very, very stable commodity. It's a very stable asset class, which doesn't have that kind of violent nature of moving here and there, and that's the reason. And then again, we all come from India. We have seen gold has been part of our ancestral journey, right? Even like I don't know how many generations of jewelry has been passed on to my mom, and my mom to my wife, and my wife to my daughter-in-law. That trend will continue, right? Um, and not looking only at India. I mean, globally, gold has its own value. Now, when you look at again, we go back to developing countries and dollar denominated products, and people who do not want to keep their money into local currencies because of very high inflations, because of differential nature of these currencies. What are the options available to them? So either they are risk averse and they go into certain asset classes, or they understand, oh, you know what, I'm happy to put my money in Bitcoin. I don't care about volatility. I don't care about I want to make multi-bagger here, right? Or or I want to buy US stocks. Fine, that's available in some form. Then I have fixed income, I have treasury bonds, all these things. But can I get into a product which is constantly over period of last 100 years constantly growing in value, doesn't really have volatility attached to it, and it is secure, it is safe? uh, how can I get my hands on it? There's a protocol Auras on our marketplace who has been successfully tokenizing gold, silver, and platinum. They have partnered with actual refineries from which they are buying these gold and keeping into custody. So the moment, Praveen, you wanna mint a gold token from them, the money will go and actually buy the gold from refinery, move to a custodian, a facility where it is secured, right? That is the level of due diligence we do before we whitelist any protocol on our marketplace. It's important because I can sell Ferraris tomorrow without having actual assets behind it, right? And
Nobody
that's
would do something
and
like
that happens
that.
in,
That's crazy.
and that happens
There's
in
no
every
field. There's no field that could possibly do that. Yeah, because this is the problem, isn't it? Every real estate scammer in the world is marching
yeah.
towards the blockchain right now. Like, hey, we know how to sell real estate that doesn't exist. We can sell real estate that doesn't exist, and the people that bought these freaking ape things, if they'll buy a non-existent ape picture, they're definitely going to buy a non-existent building. And we have
Well,
AI. Because think of the diligence burden when you could have an AI generate an 800-page diligence package entirely made of imaginary nonsense, and then you've got to try and detect it. Is this some idiot at KPMG who's using AI to do their job, or is this actually a fake document? And
but the
KPMG
problem
is not putting the documents on the blockchain, so how do you authenticate where the document came from? Like, the entire diligence process that we use right now is about to come under gigantic pressure from AI.
well,
And the only
okay.
thing that gives you the ability to authenticate documents in this kind of way is blockchain. It's a natural fit. The AI makes the
But
entire world liquid, and the blockchain provides you with the hardness.
but we sold land on metaverse. I mean, we have done stupid things, and we keep doing that, right? And so there's no doubt that tomorrow somebody can just come up and say that, hey, there is a piece of land in Dubai available for sale. How do you verify it? These are the documents, and as Vinay said, those documents are all nicely produced by AI, right? All stamped by government of UAE, and everything is there. What you need to check the legality of it. So again, coming back to the original point, we wanted to make sure that these are genuinely produced gold, silver tokens with the proper backing. So and now we have just entered a liquidity alliance with them, where we are proposing to Web3 companies to put their treasuries into gold by buying these gold tokens, right?
Interesting.
We as partner will be providing liquidity on dexes for people to enter or exit anytime, because you need to match the prices of gold. You can't really have a different price here, otherwise arbitrageurs will jump in and they would ruin the market, right?
Absolutely.
But yeah, gold, silver, I believe that these are some really powerful assets, asset classes, which people, individual capacities would want to invest a certain portfolio of theirs. But then it becomes also important for treasuries to park some money into these assets.
I think the reconciliation and standardization of these asset classes, their rates, are also one of the key reasons why you see projects like Chainlink and many others kind of getting the kind
For
of
sure.
traction they do in the RWA space.
Yeah.
I'm so glad you mentioned that space and the due diligence that goes into the process, and also the mention you had about direct access to refineries, which is also quite interesting because Vinay, it has just been a few weeks since the Simsa JP LBMA refinery partnership came out of Mattereum. We are still a few weeks, months, I don't know, as long as legal takes, before we can actually see gold.
Oh, you have become acculturated to material. Oh, as long as legal takes. Yeah, this is that's
It
how we
when
roll.
it happens.
Happens when it happens. That's it. Yeah, exactly. I mean, we work as fast as possible. So let's talk a little bit aligning global systems, right? We have a very non-confrontational relationship with government, right? And the way that we view it is basically crypto assets are defined by code, fiat assets, real-world assets are defined by law, and there's a meeting point where what the crypto code says and what the legal text says are the same thing. And that's the space of RWAs, right? A good RWA is where the legal text and the software agree on what's happening and everybody is happy both on the crypto side and also on the legal side. So that notion of aligning, the global systems that handle gold with the global system that is the blockchain, right? When you get an agreement between the gold people about where the gold is and the token people about where the token is, and everything lines up neatly, this token equals this gold and this gold equals this token, everything is smooth and clean. And, you align the global system between dollars and you get stablecoins. You align the global system between gold and the blockchain. You get gold-backed tokens of various kinds. My preference is gold-backed NFTs. I think that's better than many other ways of handling gold, because splitting a gold bar is a legal abstraction. Nobody's actually going to take that bar and saw it up into 1 gram cubes. So at that point, the idea that your token is 1 gram of gold from a kilogram bar, there's already the beginnings of a tear between the physical world and the digital world. So 1 NFT, 1 bar, it's a real simple unification. 1,000 gram tokens, 1 bar, you begin to have to do some work to make that true. So, that merging process, we just had the first touch of contact between the blockchain system and the real estate system. But the big difference between the real estate system and the gold system is the real estate system has no global system. The global gold system is super efficient. It's really tight. Bond trading, super efficient, really tight. Equities, super efficient, really tight. Foreign exchange, oh my God, right? But then you get to these asset classes that have no digital representation at all and have no global liquidity at all. And that, to me, is the place that you're really going to see a transformation. Because if you begin to get the alignment between the blockchain and a local real estate system, take Thailand, just pick a country, right? Lithuania, Thailand, somewhere like that. If you get an alignment so that there's a good, repeatable process for getting real estate in that market aligned with the blockchain, and you can align the global system of the blockchain to the local system, what you suddenly got is global liquidity for local assets. And as more and more countries get global liquidity for their local assets, eventually you wind up with a new global regime for handling that asset that has been blockchain native from the beginning.
And it's essentially market efficiency of sorts.
It's just, imagine how tough the world would be if stock markets could only deal with assets from inside of that country. If there was no global market for equities, the entire global economy would be a clunky, grindy, less efficient place. And for things like real estate, it's basically impossible to do international transactions unless you really work at it. So, what I kind of see as the potential here is that what we go through is digitization and globalization as a single transformative moment for a vast sea of liquid assets. And the result of that, if we get it right, is a better, more flexible, more equitable world. If we get it wrong, let's try not to get it wrong. Because, what we want is flexibility. What we don't want is the kind of, trashiness of, say, private equity.
And what we are hearing now is the benefits of bringing RWA on chain. And Vinay, the economic empowerment, a piece that you briefly touched upon, and the two-way trade mechanism, is that something that you can quickly highlight? Vinay, over to you.
Well, what would you like me to cover? There are a lot of things we can talk about.
Economic empowerment and two-way trade. I think that's a key. Before
okay,
I
two-way
would love
trade.
to pick Piyush's ideas on wealth creation and DeFi liquidity.
Fantastic. So let's talk about this a little bit about in terms of flight of the various directions in which capital flies. Right. So the general stream of the world is that old people buy risk from young people, and young people buy stability from old people. So you have a bunch of money, you're 55 years old, you sold a company, you become a venture capitalist or an angel investor, and you buy a bunch of risk from young people. You're a young person, you made a lot of money at 25 because your company is doing real well, you buy from real estate, you buy some bonds, you buy some T-bills, you buy some equity in big companies. All of which are things that existed before you were born in most cases. And so there's a constant conveyor where young people that do well and make a bunch of money buy assets from older people. And so there's this constant circulation of risk inside of the economy. And that circulation of risk is driven by the passage of time. People are born, people die. Similarly, there is an international circulation of wealth. If you are outside of the G20 and you want a stable asset that you're pretty sure will be there in 10 years, the tendency is to buy assets inside of the G20. On the other hand, if you're in the G20 and you want a 16% real growth rate, you're not going to get that buying in Belgium. So you start going towards countries like Nigeria, South Africa, where they're very, very short of capital and they have crazy, crazy economic growth rates in a lot of sectors. And that also creates a kind of global circulation of capital. So what you get in these kinds of, next generation global marketplaces like Polytrade is what you're going to get is multiple forms of capital circulation or risk circulation. You're going to get people inside of the G20 that want to invest in companies and in projects outside of the G20, and they want a secure, easy to use place to do it. Similarly, you're going to get people outside of the G20 that want to buy some stability because everything is a little crazy where they are. And at that point, you've got, South African high net worth individuals buying a whole bunch of stuff in Europe because, this is looking a little weird, right? And that circulation, you get buyers and sellers meeting each other because inside of the G20 you want growth and outside of the G20 you want stability, and that creates a natural fit. You've got buyers, you've got sellers, and everybody benefits. That's good trade.
Fantastic. And when you create good trade, you also create opportunities for wealth creation that would otherwise not be easy to access, especially in emerging nations. Piyush, with Polytrade's marketplace, it is essentially creating an avenue for anyone, anywhere to discover opportunities. It could be Nvidia stock, it could be Tesla, it could be, name it, MicroStrategy, getting on with Michael Saylor and his vision for Bitcoin. Why not? So Polytrade enables that. What is your vision? What is your expectation with wealth creation? And also, how does this happen with the DeFi liquidity and yield models and the secondary trading? A quick brief for the audience who are not very familiar with how this whole thing works.
Yeah, so I think Vinay already beautifully touched upon how wealth creation would work with the money transfer between parties, between countries, between different aspects where you have a stable income and you have a high growth income. That's how the money flow should happen, and that's how wealth generation will happen at different stratas, age groups. Everybody has a different understanding of how he thinks about wealth. I think as a marketplace, our aim is very, very clear that we want to bring these opportunities to people. We want to abstract away the basic nuances of which chain, which protocol,
and even frankly, which country, right? I mean, if I say I would like to buy some real estate in an Asian tiger country, what looks like a good deal right now, 2 or 3 years from now, that'll be a search somebody can punch into the platform. And it'll come back and be like, well, here's this thing in Cambodia, and here's this thing in, Thailand, and here's this thing somewhere else. Here's your options. And you go, this one, click. You end up with something that looks like e-commerce, but it's e-commerce for financial instruments. Right?
Precisely. So I think that's why somebody funnily calls us Amazon, because we are selling real estate and Ferrari at the same time. So it could be Amazon for that matter. But that also brings me one more point, Praveen, that we have these fund managers whose job is to identify beautiful assets,
Mhm.
offer them to their LPs or investors. Um, Again, the whole struggle of moving into Web3 and saying that I love tokenized asset, but how the hell do I really go about 20 protocols, do due diligence on them, then put my money there, and then maintain an Excel file to maintain all my assets, know when to exit, know how to redeem, know how to collect my interest? It's such a nightmare, right?
Yeah.
I'm better off putting my money into US market and like I'll forget about it, right? So then this whole marketplace brings those functionalities to people, that you bring in your $1 million and you say that I want to allocate 50% to real estate. These are my preferred geographies. Taiwan, Thailand, Bali, India, US. I pick these 5 jurisdictions. I allocate 20, 20, 20, 20 each. Then I get certain options, and boom, in one click, I'll be able to buy all these assets at one place. And I don't need to maintain my dashboard because Polytrade is giving me a dashboard with all the tracks and whatever you want to track on each portfolio. So
Yeah.
that's the aim for a larger wealth creation for individuals as well as fund managers. Coming to DeFi, you know, I understand that users run after free money in Web3.
Mhm.
Unfortunate truth.
Oh yeah,
The
absolutely.
Ponzinomics, we call them Ponzinomics, right? The DeFi has been running on Ponzinomics for a very long time. When this DeFi Ponzinomics is going to get over, you need real yields, you need real returns, you need real assets, right? I think we are very close to that time where DeFi liquidity will slowly, steadily move towards real assets.
Mhm.
Uh, and I guess our aim is to tap into not only existing DeFi liquidity, but to bring more Web2 users into Web3. And again, how can we ease their journey, not confuse them with nuances of Web3, not give them 100 options, tell them you just connect your bank, do your credit card, bring your money into stable coins of whichever denomination they can be, and you are able to buy these assets. It should be
Great.
as simple as that as I'm talking and explaining,
Yeah.
right? So yeah, our I think we are all of us are working towards one common goal. It's just that how we partner together. And yesterday we were discussing among our team what are our core values. Our core values are actually collaboration, because till we collaborate, we will always fight or just work in silos for our own product, our own community, our own little bit of TVL and liquidity.
Correct.
Let's work together to bring a common ecosystem.
Wonderful. And I
Yes.
think that's going to pave the way for from a DeFi summer that we have experienced to an RWA summer where true value is unlocked,
You're
where
thinking too small. You're
tremendous.
thinking too small, right? What we're talking about is the digitization of all the remaining assets which aren't digitized. Right? It's, I mean, okay, there might be a little flash here and a little flash there as people warm up to the idea. But, when BlackRock is like, wow, we've got 10 trillion of assets under management, we like the look of public blockchains, that's a sort of indicator that what people are ready for is for global finance to genuinely globalize. And if we think of that process, how long is it going to be until 0.5% of the world's real estate is accessible on chain? 5 years? 10, right? And it's probably going to start with real estate investment trusts tokenizing their equity, and then it'll be developers that are tokenizing, individual apartments inside of new developments, and they'll be selling those things to family offices and REITs and all the rest of this kind of stuff. But it's yes, there might be a little bit of like we had a great summer and a lot of things happened and all the rest of this kind of stuff. But it's like talking about the digitization of music in the late 1990s. Somebody posts a bunch of MP3s of their album, and everybody goes like, "Wow, this digitization music revolution is sure picking up." And then 10 years later, it's 60 million tracks on Spotify for $10 a month. That's what happens with digitization. Is you do a little bit of kind of rinky-dink test stuff, and then you go from like one author has one PDF on their website for $5 to Amazon Kindle in like 4 years. There's just this point where things go vroom. And I think that is very much where we're at on RWA, because the blockchain technology is good enough for storing hundreds of billions of dollars of weird looking funny money assets. That's a strange looking token, whatever. But like the underlying technology is held up and held up and held up, and it doesn't get hacked, and everything is fine. And then all of a sudden, right, boom, all the other stuff arrives, right? And to me, that's actually the start of Ethereum, right? We've had 10 years of system testing with essentially imaginary test data. People just keep making up new kinds of test data and running through the system, and sometimes they make billions of dollars, but it's all basically test data. And then somebody says, okay, that's good enough, we can start running real stuff through it, and then you wind up with multiple trillions of dollars for hard assets. And everybody goes, oh yeah, Ethereum, that wasn't just about weird monkeys. No, it was not just about weird monkeys. Those were just test data. And now we can actually start the real game. That's how I see it.
I think that's exactly what the world is seeing now, with NFTs not holding JPEGs anymore, but real estate, gold, name it.
Yeah.
So I think it's tremendous. And I really like what you said, Piyush, that collaboration is the key. It is the mutual belief, it's a mutual trust, it's a mutual confidence that really takes this space forward, brings the users in. And yes, retail will soon follow the validation that institutional investors and B2B experiences unlock. That said, there are some very exciting announcements that I am privy to know that the Polytrade team has been, hustling and building away behind the scenes. Is there anything you would like to share with our listeners today, what they can look forward to in the coming weeks, months with Polytrade, and how they can participate and get started? You mentioned there are users who are regularly using the platform in the marketplace. I would love to also understand what you expect for other personas, entities, to engage with your project.
Yeah, so Praveen, again, being in phase 2, which is whitelisted users, and moving to public launch, everybody keeps asking me, when are we doing public launch? I never answer, because it's not market dependent or situation dependent. A public launch means the user journey should be so smooth that, once he comes, he would love it. He just doesn't want to leave, right? So for me, multi-chain assets is something which is a key priority, which is coming as a release in July itself.
Wonderful.
So we partnered with 11 chains. It's not the partnership with the chain. The ideology is that I want to bring assets on your chain, RWA assets which are tokenized on your chain, to my marketplace. So when we go to a chain and they ask us that, why are you coming to us, or blah blah blah, I said, I am not coming to you. I want assets on your chain to be listed on our marketplace. So that is the reason I will deploy my contracts on your chain. I don't need you, right? So that deployment of 11 partner chains will gonna happen in July. That means 30 plus new protocols and their assets will be listed on marketplace instantly after
Nice.
that. We are experimenting crazily, Praveen, every day. We have done art, we have done jewelry, we have done gold, silver, we have done real estate, we have done treasury bills, equity, bonds, carbon credits. We are bringing solar driven these bikes, EV bikes, from UAE, which are giving you fixed yield. They are all. My point is that we want to understand where the demand is.
Yeah.
What is it that user wants to buy today? Where a user is the most comfortable trusting the process behind that. We have done our due diligence, but I cannot convince you, Praveen, that please buy a on-chain treasury bill.
Hmm.
Right? You will buy when you believe you want to buy, right?
Correct.
So our job is to keep experimenting, keep populating the marketplace with as many assets as possible. By end of July, I'm pretty confident that we will cross 50 plus protocols and their assets to be listed with 11 chains. And these 11 chains literally cover a lot of big chains. As you can see that those chains would have maximum number of RW projects being built. So
That's great.
yeah, pretty much there we are.
Wonderful. So it's an open call to arms for everyone who is curious. And what you mentioned with the platform's agnostic approach to kind of creating and onboarding these assets, I think it becomes a no-brainer. And it also reminds me of a quote from Jeff Bezos. I'm paraphrasing here. When he said that, you don't need to necessarily come to Amazon to buy products. You can come to Amazon to just read the reviews and know if you're buying the right product.
Yeah, that's right.
For example, I think it becomes no-brainer when someone comes to Polytrade, sees the due diligence, the effort the team has put in, the simplified access to liquidity, and to be able to trade these assets. That it's a natural instinct to trust the one who has done the most legwork and has the bigger vision. Vinay, that said, a summary takeaway for the audience: with there's been a lot of exciting developments. You are still a little sleep deprived from a very huge space that you participated in a few hours back. Marion Offal, now that it's out there, what's next for Mattereum, and what should the audience look forward to? What's in the works?
So the Mattereum main sale for the European and rest of world token has concluded. So we did a token sale. We learned a lot. We got some things right. We got some things wrong. So far, the technology seems to have held up, and the legals appear to be okay. The rest of that we'll see how we do. The big announcement is that Mattereum has announced, and I should say Mattereum Germany, has announced a US token project. Now, for various reasons, we have to be staggeringly careful about what we say about that. So all I'm going to say is all relevant information is at Mattereum.io. And I can't really say any more about the US token project at all, other than if you want more information about that, go to Mattereum.io. Nothing is for sale yet. So that is in process. We'll know more about that quite soon. And the European token, I don't even know whether my disclaimers have changed. But the disclaimers which applied pre-sale were not available in the US or UK. Terms and conditions apply. Token is issued by Mattereum's German subsidiary, and the exchange partner is Swarm. So, it's kind of like I've been in the crypto business since 2014, and I finally have a token of my own. How amazing. Now I can have all the problems that people who have tokens and communities have, and also a token.
But the interesting part about tokens is, and that's what the non-crypto audience perceives of the blockchain. There is funny internet money changing hands with value associated with it, but everyone knows the value of a bar of gold. Everyone knows the value of a diamond. Everyone knows the value of real estate. This is stuff that you can speak to your grandmother about, and everybody gets it. And I think that's the true value and potential of what RWA brings to the world, and also what it has in terms of an offer for the audience. Again, I hope this podcast has been helpful and has opened your mind up to what projects like Polytrade and Mattereum are bringing to the table. We look forward to answering your questions. You can join Polytrade on their handle on X and their communities on Discord and Telegram. Mattereum, of course, is available on X and also on Telegram. Happy that you could join us, and I'm super thrilled to have these founders join us and spare the precious time with us. Again, we hope you have a nice time, and we'll see you on the next one.